all these newly minted IPOs attracting so much attention, what are we supposed to do with last year's terrific crop of deals? Many of these stocks are somehow in the doghouse, in part because money managers are selling them to participate in the next round of initial public offerings. And at this point, some of them may be too attractive to ignore. Consider the case of Zuora. That's the cloud-based software company that helps its customers launch, manage, and grow their own subscription services. I like to think of it as kind of a pure play on the subscription economy, and it's looking more and more like subscription services are the future. But after performing pretty well out of the gate, Zuora stock got slammed late last year. While it's rebounded from its lows, it got hit again when the company reported last month. The guidance was a tiny bit light. Look, the quarter was good. Sometimes it's hard to understand this stuff. Still, I think this is the best way to invest in the subscription economy. And with the stock trading at 7 times next year's sales, which is cheaper than a lot of others, and certainly than it used to be, I think it's attractive. So let's take a closer look with Tien Tzuo. He's the founder and CEO of Zuora, who literally wrote the book on the subscription economy, subscribed, which I love. You get a better sense of how his business is doing and where it's headed. Mr. Tzuo, welcome back to Mad Money. Good to see you, Tien. Have a seat.
Thank you. Here.
There's a great line in your conference call, not the one where you mentioned me. I'm always grateful for that, where you say the vast majority of business models have to eventually transition to subscriptions. That seems like a bold comment, given the fact that most of businesses don't even know what a subscription does.
Yeah.
How's it going to happen?
Well, they know. I mean, for the last 10 years, we've seen the rise of what this thing we call the subscription economy. But here in 2019, what we're starting to see is this idea of an end of ownership. And that might sound like a crazy idea, but all around you, you're seeing unit sales go down. Like, just look at the car industry. The number of cars sold last year has actually went down.
I'm glad you mentioned that, because with employment up, and with household formation growing, we should have the biggest number of cars sold.
We should.
It's not happening.
And car sales are down in China, of all places, right? And where so many more people are coming into the middle class, but it's going down. And because there's so many other options out there that anybody under 35 is probably opting not to buy a car.
Now, do Ford and GM understand this?
Well, here's the thing. The number of miles driven have gone up. And so if the car companies can think like a subscription company and tie their revenues to miles driven, their revenues will go up. But if it's tied to car sales, it's only going to go down, down, down for the next decade. And so McKinsey says actually there's $1.5 trillion of connected car services available. And the question is, who's going to get that revenue? Is it going to be the car companies? I would bet on them.
Now, I think people have to understand the unique proposition you offer. Obviously, as the founder of The Street, we use you. Every subscription company that I know has to use you, because really, you are the gold standard. And yet, when I look at it, I mean, I see these companies like Caterpillar.
Yeah.
I mean, what does Caterpillar know? They reported today, a good company, but they're not new in the sense of knowing how to subscribe to something.
Well, what's driving the end of ownership? I mean, we think subscription businesses, we think these technology companies.
Right.
Like Zoom is a great example of
which I use, and it's fantastic.
Yeah, and so we power Zoom's business as an example. Right. Or you think about media companies, Dow Jones, Financial Times, The Economist, right? But every single physical product is now coming off the assembly line connected to the internet. And what's happening is these products are now becoming essentially edge devices in a network. And so what companies are saying is, now that my products are smart, one, my engineers know how my customers are using my product, which is exactly what the software as a service companies. They know how you use your product. They provide a service to you. And so what you're going to see is every physical product from appliances from Whirlpool, cars from Ford, tractors from Caterpillar, they're all going to go through a transformation and become services.
Well, I think it's rather amazing, because I think a lot of these companies will be far more lucrative. It's not something they should necessarily fear, correct?
Well, if you look at the software industry was in the doldrums around 2005, 2006. But when the industry tipped over to software as a service, it found growth. And we really believe that the manufacturing industry, as it goes through this transition, is going to find new sources of growth, because the power of subscription businesses ultimately is growth. It helps you grow your businesses.
Well, you've got an outstanding statistic. You say Subscription Economy Index, the latest one from the fall, shows that over the past 7 years, subscription businesses grew their revenue 5 times faster than the S&P 500?
5 times faster than the S&P 500, and grew about 300% in the last 7 years. And so what we're seeing is the early adopters of the subscription economy are finding growth, and that's why everybody is moving into the space.
Now, usually I hear that Europe's way behind us. Europe's moving fast on this.
This latest study we did was super interesting. Europe is actually slightly faster in growth of the subscription economy. For a while, the technology sector was in the lead, but the IoT sector has actually eclipsed the technology.
Really?
And the Internet of Things, manufacturing companies releasing smart devices connected to the internet.
Now, you've also got this thing Collect, which I like, because there's a lot of, one of the big problems people have with subscriptions is deadbeats. Now, we don't call them that, we call them people who haven't paid.
Yeah.
But you've got some way to be able to reap that harvest.
Well, collections is a great example of how these businesses are so different. In the old model, I shipped you to the product. If you didn't pay me, I come to collect.
Right.
But now I want you to continue using the service. And so maybe you just need a break, maybe you need to update your credit card, right? Maybe you need some help through some
Right.
period of time.
Right.
So collections is, once you have a relationship with a customer, collection becomes a sensitive dance to make sure, look, I would like you to remain a long-term customer. How can we do that?
Well, what I was going to say is that the key to me in subscription is long-term value of customer. And if you can make it so someone is a customer and they stay long-term, I can price that company's value.
Well, that's why Wall Street is valuing these new subscription businesses that are coming on the market so much higher than their product counterparts. And I think you've got the essence of it. The people that don't quite understand the subscription economy are taking existing products and trying to figure out how do you pay over time. That's not what this business is about. This business is about building customer-centric business models, taking technology today, IoT, mobile, whatever it is, right, and then transforming what you do as a service. This is the heart of these digital transformations that the companies are going through.
Well, I said this when the company was private. Now it's public. I love to have companies that ultimately go public. It's a game breaker. You can't really run a subscription business unless you hire these guys. It's rather amazing. It's about as close to monopoly as I've seen if you are in the subscriber business. That's Tien Tzuo. Tien Tzuo is the CEO and founder of Zuora. And, you know, ZUO, I don't get the price. Honestly, sometimes you just have to say, I don't get why it's trading so low. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.